afternoon and good evening to all. Myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will be trying to complete the algorithm using the indicator time segmented volume. This is going to be third and the final part involving this indicator. So let us now get to the work using the Visual JForex board, which has been developed by the Dukascopy Bank SA to make the algorithm development job quite easy. The development so far includes this instrument subscription where the Euro USD is being used as the instrument of choice. Afterwards, the position amount was defined at zero. I have added these two if blocks, TVS blocks, the time segmented volume indicator block, with the candle period being 15 minutes and the shift value, the look back period is different, 1 and 5 respectively. To look at the price volatility, we are also taking the help of get historical candles of 15 minutes along with the hourly. And then to pinpoint the exact entry point, these 10-second candles will be used. On the lower side, we have these calculations in place to define certain conditions. I have calculated the difference between the closing values of 15 minute candle as well as hourly candle. And I will give you a refresher of sort of what the logic is. And these are the conditions. Later on, I realized I missed on adding one condition, which we will add in today's session. The condition was that prior to the execution of the buy trade, there should have been good enough price decline. And to make sure that was the case, we were to make sure that the difference between the closing values of the last 15-minute candle and the 15-minute candle which had closed 1 hour back, that difference should be quite less compared to the difference between the last hourly candle close and the candle which had closed 6 hours back. And that difference between the two hourly candles should be at least more than 8 times the difference between the 15-minute candle difference. So that condition which we had forgot to add, I will quickly add it and then I will explain to you what the requirements are for the execution of the sell trade. I had carried out this calculation last time around, so we simply have to compare these values, and that's all we need. So I will take this if block and we compare the 8 times of the difference between candle 18 candle close and candle 19 candle close, that is BCF, with the difference of candle 21 candle close and candle 20 candle close. And here the second input should be greater than first input. Everything else remains the same. Second input greater than first input. So with this, we have now fully defined the conditions for the execution of the buy trade. Now, let us look into what the conditions are for the execution of the sell trade. We need the price momentum to have been bullish for quite long, and after that, whenever the consolidation starts, that's the time we want to get involved for the possible correction in the underlying instrument. So for that, we will be relying on the time segmented volume data as and when the price output values of the TVS start to decline while the price action is still ascendant, the price action is still showing the upward signs. We look for such instances of divergence between the price action and the TVS output, and we consider that to be indicative of a possible turnaround. So we will go for it provided the price action had actually rallied quite a lot prior 6 hours. So for that, we will compare the difference between the last 15-minute candle and the candle which had closed 1 hour back. So that difference we will take into consideration, and then we will compare it with the difference between the second last candle and the candle which had closed 6 hours back. Let me check what are the shift values. We have already defined this. So the second our second last hourly candle and the sixth last hourly candle. And in terms of 15 minutes, we will be taking the last one and the fifth last. Okay, so we take the second last hourly candle and the fifth last hourly candle, no, sixth last. Okay, and we take that difference into account, and it should be more than 8 times the difference between the 15-minute candle closing values. And if that is the case, and also on the lower time frame of 15 minutes, if the TVS values start to decline while the price action is still ascendant, we will go for the execution of the sell trade. So the idea is quite simple to understand and equally easy to implement. So all we have to do is get the calculation done to figure out the actual difference between the two 15-minute candle closing values. For sell side, we need the candle 18 to have closed higher compared to the candle 19. So we deduct candle 19 candle close from candle 18 candle close. We had calculated that last time around. It is here. So we need only hourly difference. For that, I will add calculation expression block. All right. So here it is. And we need the second last hourly candle to have closed higher compared to the sixth last hourly candle. So we take candle 20 candle close and deduct candle 22nd candle close. This is candle 21st candle close. So there is going to be A1 minus A2. All right. And along with this, we have to consider the 8 times of the closing difference of two 15 minutes candle with the look back period of 1 and 5 respectively. So this needs to be multiplied by 8. So there is going to be A1 into A2 I'll name it as CF. All right. Now we join it to the multiple action. Okay. And let us now start defining the conditions for execution of the sell trade. We are going to need probably 6 of these, as our formation is going to be symmetric with the buy side. So we need TVS value to have started declining. So we need last 15-minute TVS output to be lower. So first input less than second input, whereas the price action was still on the rise. So we need candle 18 candle close to be higher than the candle 19 candle close. Okay, so there is going to be first input greater than second input. On the hourly price action, we need similar requirement to be true. We need the closing value of candle 20 to be higher than candle 21st candle close. So here there is going to be first input greater than second input. So we have defined the price action requirements. Okay, then we need the difference between the hourly candle closing values and the 15-minute closing values to be as per the requirement. The hourly difference should be more than 8 times the difference between 15-minute candle closing values. So for that we need CSF to be greater than SCF. So again, first input greater than second input, and then as and when price starts to dip below the last 15-minute candle closing value, the execution should happen. So for that we have to take the candle 18 candle close, which is the 15-minute candle, last 15-minute candle. So here it is, and compare it to 10-second data of the closing values of these two, candle 23rd and candle 22nd. Candle 23rd has a look back period of 1, so it needs to have closed lower, whereas candle 22nd, which has a look back period of 2, should have closed higher. First input greater than second input, and here in this case first input less than second input. Okay, I think after this all we have to do is get the trade command block, which is going to be a market order. Sell trade, first input less than second input. All right, so here we are. Now we have to define these input parameters. Trade amount is going to be 0.1 million. Slippage, I think 2 pips is good enough. Stop loss will be same as we had put in for the buy side. So stop loss is going to be 20 pips and take profit of 30 pips. All right. So here we have defined all the required parameters for the trade command block. And with this, our formation looks symmetric. we have put in place all the requirements for the execution of the sell trade, and it is looking like the mirror image of the buy side. Okay, so with this we have this complete formation using the time segmented volume indicator. And if any of you have any idea or any query, you can write back to me in the feedback section. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. For testing on the historical data, you will need the help of JForex platform. So all these links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.